Hello, beautiful people. Good morning to you. Let's confirm that you can see my screen, please. So, if you can see my screen and you can hear my voice clearly, please type in hi in the comment section so that we can get this started. So I would like to see some feedback, please. If you can see my screen, let me know in the comment section so that I can get this feedback that we are good to go. All right, so what's happening right here in the comment section? Okay, Juni 972, good morning to you. VV, good morning to you. Hello, how are you doing today? 8288, well, I'm fine, thank you. Hey, Carrie, how are you doing this morning? Glad to have you around. I can see your eyes. All right, Scott Benji, good morning to you. Thank you very much. 8288, thank you once again. Team Roller, how are you doing this morning and how's work? Thank you very much for that confirmation. I can see Scott Benji the second time. Thank you, Scotty. All right, so pleased to know that we are good to go this morning. Well, I'm so excited to welcome you all to yet another promising session on the X Trend Speed Live. My name is Sheriff Daramola, and for the next 1 hour, I will be your host, where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. And for those who are joining us for the first time, you are highly and most welcome to this session, and I'm pleased to have you guys around. And what we simply do here on a daily basis is to review all the instruments we have been monitoring since the beginning of the week. So we review them. I give you advices on how to manage this trade. Then we also take a position ahead of the New York session. I would like to let you know that it's very advisable that you continue to stay tuned in so that you get to understand how this works. At first, it may look a little bit overwhelming, but with time, you will definitely get to understand how this works, and you will be able to use the information you have gathered here to make your own individual decision when you're about to open a position. So once again, I welcome you and glad to have you around. So stay tuned in. We do this on a daily basis, 10 a.m. UTC. So I wish to see you once again tomorrow. So with that being said here, I welcome you all once again, and let's dive right in to the business. So the first thing we normally do in order to keep tabs with the fundamental perspective in the market is to look at the economic calendar. And what we look out for in the economic calendar is macroeconomic events that will be affecting any of the instruments that we have been monitoring since the beginning of the week. And obviously, if we look at what we have been monitoring since the beginning of the week, we want to be checking events that will be affecting the US dollar, the pound, and I think the Japanese yen as well. So these are events we are going to be looking at. But for today, 30th of March, Thursday, we only have one macroeconomic event to look forward to, and that is the gross domestic product annualized for Q4. This is a very high major impact event that everyone in the market will be looking forward to, as it shows us the monetary value of all the goods, services and structures produced within the US economy. And this goes a long way in giving us a gross measure of the market activities, because it indicates the pace at which the US economy is growing or decreasing. And if you look at the data we have here, the previous data came in at 2.7%. And we have a consensus projection of 2.7% as well. So we are going to be looking forward to this event, which is coming up in, I think, 2 hours from now, to see if the actual data that will come in will be as expected, beyond expectations, or below expectation. And if you look at the price, if you look at the charts critically well, you will see that the market participants are already anticipating this event, as you would observe that in the last 24 to 48 hours, price action has been going through a choppy situation, a consolidation phase at most of all the major pairs that we have been monitoring. And this is more or less a sign that everyone is looking forward to this event, and we shall be positioning ourselves in such a way that we can catch this opportunity during this live session. So my advice is you stay tuned in so that you don't miss out on any of the ideas we shall be dishing out during the session. So with that being said, here let's dive right into the current market structure. And as usual, the first commodity we are going to be looking at today is the US oil. And if you have been with us since the beginning of the week, you would know that we have been quite profitable on the US oil, as we have been buying this commodity since the beginning of the week. And in fact, we were lucky enough to scoop over 800 pips in profit on all of our positions at the beginning of the week. And what makes this very interesting is the fact that we made all this right on that same day on Monday, as we saw our price action did a final breakout of that channel that we identified just right within the $69.80 level and the $69.10 area. And you all know what we look out for whenever we have this kind of beautiful channel. We want to see price either do a breakdown of structure or a breakout of that structure for a trading opportunity. And with our buy stop order sitting above the $69.80 level here, we finally saw our first buy position for the week triggered at this point. And if you recall vividly, we had able to ahead of time identify structures like the $70.20 level, where we were looking forward to more opportunities to add more position to our existing trade. And as you can see here, right on Monday, a couple of hours into the New York session, we saw price action break out of that structure to trigger the second position. And we also had another structure at the $71 level, which triggered the third position on this one. And we rolled the move all the way up into the $73 level, where our TP target was rightly situated at this point. And since price action hit our TP target on Monday here, we have seen a situation in this market where price action appeared to have been caught within a consolidation phase just right within the $74.35 level and the $72.50 area in the last 48 to 72 hours now. And this more or less a sign that there is a consolidation phase in this market where participants are probably looking forward to a catalyst that will be bringing some liquidity into this market. And since we are looking forward to the GDP today, it quite makes a whole lot of sense while we have been witnessing this consolidation phase here. However, on Tuesday we had some buy positions too. On Tuesday we took advantage of some buy opportunity at the $73 level. We also had some opportunities here at the $73.50 area before the breakdown of the structure happened during the course of yesterday's trading session. And remember what I told you during the live session yesterday, where we were able to identify this bullish trend line here, which has been guiding the bullish momentum for I think 24 hours at that particular point in time. And we said we shall be using this trend line yesterday as a guide for our trading activity. And one thing we agreed on here is that if price action continues to trade above that bullish trend line, definitely we want to feel comfortable in our buy position, and at the same time look out for more opportunities to add more position to our existing trade. But if price action breaks down that trend line, then definitely we will have no choice than to look out for selling opportunity. And look at what happened here during the live session yesterday. During the New York session, I think 3 to 4 hours into the New York session, we finally saw the breakdown of that bullish trend line, which also shares a confluence with that $73.50 level. And with a sell stop order situated right below the $73.50 level, we had a sell position triggered yesterday, and I hope you are part of this move as price action moved significantly, and with about 85-90 pips thereabout, we had a profitable position at that point. And I hope you moved your stop loss accordingly to secure the current position just right before the buy pressure resumed in this market. And if you recall vividly what I told you about this current structure around the $72.50 level yesterday, I told us all that if price action ever breaks down that key level, that key trend line we had here during the week, during the New York session yesterday, that we shall be looking forward to this bust up around the $72.50 level, which also shares a confluence with this bullish trend line that has been supporting this bullish momentum since the beginning of the week, to see how price action will be reacting to that level to now determine if we are going to be adding more sell position to our existing trade, or we shall be getting ready to buy the US oil. And you can see what happened as soon as price got into that bust up. We begin to see some buy pressure resume around that area, giving us a clue that we might be in for another second wave of the trend continuation to the upside. And looking at the structure here, it appears price is one more time respecting that bullish trend line that has been supporting this bullish momentum since the beginning of the week, to further emphasize the strength of the sellers at this particular point in time. And with the situation here, you must have been taken out of your sell position at some small profit there, or at worst case scenario break even if you had moved your stop loss to your entry point. And with the situation here, seeing what was happening here during the early hours of today, what I actually did here was to identify a platform upon which I will be able to take advantage of a buy position in this market. And for those who are actually taking advantage of the buy position right around this area, well, kudos to you for being on standby to have caught that move, as you will currently be running with about 9,900 pips in profit at this point. For me personally, I missed out on this move, and the reason why I missed out was simply because this all trading activity here happened during the middle of the night, and I was fast asleep then, so I actually missed out on that opportunity. But when I woke up this morning, this was what I was able to identify here, a platform right around the $73.20 level, which will definitely be one of the key structures we shall be using today to guide our trading activity. And for those who had bought around this area, well done to you guys for being on that standby to take advantage of that move, as that was the area where I was able to join this move this morning. So what we are going to be doing right now today is to see how we are going to be using the structures to guide our trading activity today. And for those who had missed out on this buy position here, we shall be looking out for opportunities where we could take part in this potential move to the upside. So with the current situation we have here, the first thing I would like us to do at this point is to scale up into a much more higher time frame. Let's see things from an holistic point of view before we come back down into the lower time frame to make a decision for today. So scaling up a little bit into the higher time frame here, so I will be going on into the daily time frame so that we can take a quick look of what we saw at the beginning of the week and how we decided to buy the US oil. So this is the daily time frame here, and let me zoom into the current structure so that we can see things more clearly. So this is the situation we have here. And it is quite obvious that price action has been bearish since the second half of last year. And to further emphasize the strength of the sellers at this particular point in time, we have connected the series of lower highs, which gave us this bearish trend line. But that is not the most important structure here. But what we want to be focusing right now is just is what has been happening here in the last 4 to 5 months, where price action was initially trapped within a channel here between the $82 area and the $70 level. And since the beginning of this month, which was what we focused on at the beginning of the week, we saw this impulsive bearish move to the downside, which emphasized the strength of the sellers for this month. And one thing I laid emphasis on during the beginning of the week was the fact that this impulse leg actually broke down two key structures in this particular market. Now, the first structure here is this bullish trend line, which was broken a couple of weeks ago. As you can see here, we had this bullish trend line which was supporting a higher low in this market, and it was finally broken here during the second week of this month, and then we saw price action drop into the downside, breaking another key level at the $70 to $70 area. And if you remember vividly, I made mention that the $70 level has been the lowest point price action has ever been since December 2021. And with the breakdown of that structure, of course, we expect that if price action breaks down key structure like this, we expect that one point in time price is likely going to be coming back to retest the structure to incite another wave to the downside. Now, with the situation here, price did not respect the $70 level, so we were looking forward to our TP target for this buy position to end at an area just right around the bullish trend line, where we shall be expecting a retest of that structure there to incite another wave of bearish momentum to the downside. But with the way things are looking right now, we need to be very, very patient, as there's still a possibility that price could break above the bullish trend line to incite another wave of bullish momentum to the upside. And from the fundamental perspective, I also made mention that we are also looking forward to the OPEC Plus meeting, which is going to be coming up on the 1st of April this month, next month. And this is more or less another event too, from the fundamental perspective, that majority in this market will be looking forward to as well. So we don't know what the decision is going to be like. We don't know what they're going to be talking about, but definitely they will want to be doing a policy that will be bringing back the oil price to the upside, and this might likely be a cut in oil production. We never can tell, but whatever happens will determine what our next line of action will be. But at this particular point in time, you would agree with me that we are at a critical level right here, as price action appeared to have tested the $74.25 level. So we are within the area around the $75 level, where we want to see how price action will be reacting to the structure to decide if we are going to be getting ready for the second wave of that bearish momentum to the downside. And if we do have a reversal pattern here, a trend continuation pattern here on our lower time frame, then a breakout of structure will be welcoming a trend continuation to the upside. So these are the things we shall be looking at on a much more lower time frame. So what we are going to be doing right now is to scale back down into the 1 hour time frame, where we want to see how price action has been reacting to that area between the $72.78 level and the $74.20 level, which is a consolidation phase happening here in the last 3 days to decide what our next line of action will be. So we have the $74.30 and the $72.70 area to look out for on the 1 hour time frame. So let's scale back down into the 1 hour time frame to see this channel, and let's use it as a yardstick for trading activity for today. So I would like to make this chart a little bit cleaner. So we are going to be cutting out structures that we no longer need at this point, so that we can make things a little bit cleaner. So for today, I told us all we are going to be using the $73.20 level as a yardstick. So this is the consolidation phase we identified on the daily time frame. As you can see here, it's quite choppy, and it could turn out to be a trend continuation pattern, and at the same time it could turn out to be a reversal pattern. And if we zoom out to see what has been happening here since the beginning of the week, you would agree that a retracement is long overdue at this point, as those who took advantage of the bullish momentum right around the $69.10 level will at one point want to be doing some profit taking activity, which might lead into a retracement back into probably our golden zone area in anticipation of another wave of bullish momentum. So these are things we want to see here and want to identify around this area. So the first thing I will do here is to first of all delete this one, and then I would want to, I think I will have to keep the $73.90 level because it's a key structure for this week too as well. and we have the resistance line here. So I think we still have to keep some of these structures here. So I will just have to extend this bullish trend line, which has been supporting this bullish momentum since the beginning of this week. I'll have to keep it there and make it a little bit thicker so that it emphasizes its significance with this current market structure. And we have seen how price has respected that trend line here. So I'm of the opinion that price might be going to the upside. So I told you I have a buy position around this area. So we are looking forward to another breakout retest of the $73.90 level to add more buy position. Then a further breakout of the $74.35 level will be that straw that will break that that camel's back around that area to give us a very strong bullish momentum to the upside. So one thing for sure here is if price ever breaks out of the $74.35 level, we are going to be looking forward to a massive move to the upside. So that is how we are going to be buying here. So the platform for our buying momentum here is at the $73.20 level and the bullish trend line. So this is what we shall be using to guide our trading activity for today. So as long as price remain above the trend line and the $73.20 level, we feel comfortable in this buy position that we are in right now. So like you all know what we do here, even in as much as we are looking out for more buy positions in this market, we should also take into consideration the potentials of the sellers in this particular market. And if we consider the impulsive move that we saw here during the New York session yesterday, this bearish impulse leg, it's more or less a sign that sellers are very strong in this particular area where we need a breakout of the structure to confirm the strength of the buyers. And if we take this into consideration and zoom things a little bit further out, you will notice how price action appear to be transitioning into something that looks more like a reversal pattern in the form of a head and shoulder pattern. So we have the left shoulder, we have the head, and we have the right shoulder here, which appear to still fall within the range of the left shoulder, I guess. And we might likely see the $72.50 level serving as the neckline of this reversal pattern. So if we are going to be selling the US oil for today, well, I would likely want to see price action break down the $72.50 level for that selling opportunity. And if you look into the past here, look at what has been happening here since Tuesday's trading session, you will see how the $72.50 level has been a strong buy niche in this market, rejecting all attempt by the sellers to break down of that structure. So if this is going to continue, then definitely we are looking out for buying opportunity. But if price action takes out all the buy positions here, then with a breakdown of structure, then we'll have no choice than to look out for more opportunities to sell the US oil for this week. So for today right now, we are bullish on the US oil, but if price action ever breaks down the $72.50 level, we'll definitely want to be thinking of selling the US oil for today. So that is my view here on the US oil. If you have any questions, feel free to drop your inquiries in the comment section. So I will be taking the next 10 to 15 seconds to read through the chat and see if there are any questions before I move on to the next pair. So what do we have right here in the comment section? Okay, I can see steamroller okay, all right, I've read that. 146, hello, how are you doing today? 76876, good morning. 634, how are you? 393, Damika, how are you doing this morning? 0357, good morning to you. Okay, so these are all greetings, thank you very much. Okay, so in the absence of no questions, I want to assume that we are on the same page right now. So we shall be moving on to the next option, which definitely is going to be the US tech option. Hold on a second, please. Hold on a second, please. I'm trying to figure out something here so that we can have a better quality. All right. Okay, so we are good now. So the next option we are going to be looking at is the US tech, and on the US tech we have been doing quite well so far this week, and let me quickly run us through how the week started for us on the US tech before we go into the details of what our expectations are going to be like for today. For the US tech, the week started at a situation here where we saw price action consolidated between the 12,855 and the 12,780 area. And this is quite a simple setup, as we all know that whenever we have this kind of channel, we need to see either a breakout or breakdown of that channel for trading opportunity. And just right during the morning live session on Monday, we saw the breakdown of the 12,780 here, which was a beautiful signal of a potential bearish momentum for the week. And during the live session, we were around here, and I told us all that we want to be having our stop loss just right, our sell stop order just right below the 12,780, where we are going to be looking for an opportunity to sell. And that was exactly what happened. Price action dropped below that structure, sliced through this 12,780, and we rode the move all into the TP target at the 12,650, closing that day with about 130 pips in profit. Then we also had another opportunity to add more positions as soon as price broke down the 12,740, and that also gave us about 98 pips in profit. So as at the beginning of the week on the US tech, we were quite profitable on this pair. Then on Tuesday's morning live session, we talked about a continued selling pressure after citing this bearish engulfing candle, which sliced through that key level that we identified at the beginning of the week, which is sitting right around the 12,650. For those who are not part of the beginning of the live session this week, well, don't worry, I will be giving you a clue into the importance of that structure when we look at the higher time frame. Then we saw the retest of structure, which also helped us to give for confirmations that sellers might likely come in. So with a sell stop order below the structure, we were able to ride the move as price action moved about 130 pips for the second time that week. So that was on Tuesday there. So as a Tuesday, we were quite profitable on this one, and we missed out on this buy position here. I don't know if you took advantage of it, but if you did take it, kudos to you for being on standby to catch that one. But one thing we observed on this chart yesterday during our live session yesterday was the fact that price action was looking a little bit bearish this week, and after we connected the series of lower highs, we had this bearish trend line figured out yesterday. And one thing we said yesterday is that we are going to be using this bearish trend line as our yardstick for trading activity, coupled with the structure here between the 12,740 and the 12,700. And if you recall vividly, yesterday we were around this area where we saw this consolidation phase happen, which made us to identify this channel here, and we said either a breakout of the resistant line at a 12,740 will confirm that the bearish trend line is no longer strong for holding selling pressure anymore. And if a breakdown of the 12,700 happens, then probably that will give us a sign that this breakout is a false one. And with our sell stop order below the structure and our buy stop order above the 12,740, we saw how the price action triggered our buy position there, breaking out of that structure. And in fact, if you had missed out on that first one, the market gave us another opportunity as we saw price action come back to retest that structure. So it was quite a profitable trade yesterday for us on the US tech, as if you are taking that move, you will be running with about 130 pips as price action hit our TP target. Remember, our TP target was at the resistant line here where price action started this week. You saw it here, right here. This was where price action started this week. So we had our TP target around that area, and we were able to make about 130 pips on that one as we rode that move all the way to the upside. So for those who have been part of this profitable trade so far, you guys, well done. You guys are the best. So what we are going to be doing right now, for me this morning, what I did was to, after citing the breakout of the 12,860, I was of the opinion that we might likely be seeing price action continuing to the upside. So I had a buy position triggered here, with already moved my stop loss accordingly to secure this position. So if you are taking advantage of this one as well, well done to you for being on standby. So you want to be securing this position by moving your stop loss to your entry point, and let's see how long price action will stay above the 12,860. And if you had missed out on this opportunity, it's okay, don't worry. We are going to be evaluating the current market structure to see if price action will be giving us more opportunities to join this potential trading opportunity to the upside. So the first thing we are going to be doing right now is to scale up into the daily time frame. Let's quickly have an holistic view of what is happening here. Is the current market structure in line with what we identified at the beginning of the week? And if it does, then we are going to be feeling more comfortable to add more position to our existing trade. So the first thing we are going to be doing right now is to scale back up into the daily time frame. And on the daily time frame, what did we see at the beginning of the week? Well, this was what we saw here. So this is the daily time frame here, and the first thing we acknowledged was the fact that price action has been bearish. And in fact, throughout the course of last year's trading session, we saw how price action continued to find lower highs in this market. And what we did here was to connect a series of lower highs, which has given us this bearish trend line that you can see on your screen right now. Now, if we zoom into the current structure here, that is what has been happening here since the month of October last year, you will see how the 10,500 zone has been a strong memory for buying power, and at the same time rejecting all attempt by the sellers to continue to the downside. And as a result of this, we saw what happened at the beginning of the year. We saw the bullish momentum begin on the month of January this year, and price action has transitioned into something that looks more like an ascending channel at this point. So this is where our central focus was at the beginning of the week. Then we saw how price action was rejecting the 12,800 during the course of last week, and we went to as far back as the month of August last year, where we saw that level was serving as a strong selling niche for participants in this market. The same thing also happened here during the month of February this year. We saw how selling pressure resumed around that area. Then during the course of last week's trading session, we saw selling pressure around this area, and we were of the opinion at the beginning of this week was the fact that we are within a very significant confluence at this point. And we all said that if selling pressure continues right below the 12,800, we might likely see price action break down the support line of that ascending channel to inside another wave of bearish momentum to the downside. So we were part of this bearish momentum initially, which gave us about 250 pips in total. And then the bullish momentum that started yesterday, we were also part of this one as we rode the move all the way to the upside here. And if we look at the current candle here, it appears price is currently trading above the 12,800 level, which happens to be the first time price. Okay, it's not the first time anyways, but we want to see if price will be closing above the 12,800, and if it does, then we might likely be seeing a trend continuation to the upside, probably into the resistant line of that ascending channel, or the 13,800 level, which also has a strong memory for selling pressure in the past. So now that we have price action trading above the 12,800, is this going to be a bullish momentum for the week, or is it going to be a false breakout of the 12,800? Well, this will be more identified when we scale down to a much more lower time frame. So join me right now with the information we have gathered here on the daily time frame. We want to scale down to a much more lower time frame to see how price action has been reacting to the structure in anticipation of the GDP today. So let's scale down to the 1 hour time frame. So we shall be taking into consideration the 12,800 area, and let's see what we have here on the daily time frame, on the 1 hour time frame. So this is where we are right now. price action is trading above the 12,860, which is very close to the 12,800 that we identified earlier. And I told us all that we have a buy position triggered here, and price action appeared to have broken above and closed above that level for the first time in 1 week. So with the situation we have here, it appears that the bullish momentum is getting stronger in this market. So for those who are still in this trade, well done to you for catching this one. And for those who had missed out on this opportunity, well, at this particular point in time, I will just say that we want to remain patient. We don't want to be jumping in on a moving train in front of a moving train. We need to be very patient at this point. So we might likely see price action do a retest of the 12,860, and if this happens during the New York session today, then we might want to be getting ready to be part of a trend continuation to the upside. But if price action breaks down to 12,860, remember, a breakdown of the 12,860 means that we are back into the territories of the sellers in this market. But if it breaks down, remember, we are not getting too excited right away, as we need some confirmations to happen for us to be able to join that sell momentum. So we want to see something like a retest of structure, continued selling pressure below the 12,860, then we could be part of this move to the downside. So that is the only way, that's the only structure we want to be seeing here for us to sell the US tech for today. So we want to see a breakdown retest of the 12,860, then we could join the bearish momentum to the downside. Now for today's trading session, sincerely, I would like to make things a little bit easy for us to be able to see trading opportunities for us today. So what I will be doing right now is to take into consideration what has been happening here since Tuesday in the last 48 hours. So I'll be bringing out my line chart, then connect the series of higher lows in this market. I think we have one here. If I connect the series of higher lows here, we have this trend line. It's very possible that we have two trend lines with this current market structure. So let me put the first one here. I'll make this lighter. Then I will do the second one here using the lowest point here since the beginning of the week. Okay. Okay, this is the lowest point here. Let me use this. So I'll make this. Okay, so let's bring back our candle chart to do some readjustments. Okay, so we have something like this. So we have two trend lines here, which both of them emphasize the strength of the buyers in this market. So let's see what happens going into the New York session today. So what I'm saying here, what does this trend line do for us? It helps us to be able to be comfortable in the buy position that we have. So what this simply means is if price action remains above both this trend line. So for this one, let me just use one here. Let me use this one. So I'll thicken it a little bit to emphasize its importance for today. So we have this trend line figured out here. So we want to see price action continue to trade above this trend line for us to feel comfortable in our buy position in this market. And if at any point in time price action comes back to retest this trend line and buy pressure resumes, we want to be part of that move to the upside. So this is my view here on the US tech. I hope I made myself clear. If you have questions, feel free to drop your enquiries in the comment section. So moving on now, we are going to be talking about the GBPUSD. So on the GBPUSD this morning, let's run through what has been happening since the beginning of the week. The GBPUSD has been very choppy in the last 48 to 72 hours, and I can tell you this must be connected to the anticipation of the GDP, as everyone is waiting for data to come in to give us a clue of where to be going on this pair. And if we look at what has been happening here since the beginning of this week, you will see that the week started on a bullish note, as you can see here, where we saw our price action was falling within a consolidation phase. It was quite indecisive during the early hours of Monday's trading session before the final breakout of the 1.22500 level. In fact, price action broke out, and if you had missed that opportunity, the market gave us more opportunities to be able to be part of that move, as we saw multiple retests of that structure happen even 4 or 5 hours after the first breakout of that structure. So at this point, we had our first buy position for the week, and in fact that move ran for about 80 pips before the bearish momentum began. Then we also had a second position triggered here on that same Monday evening. We saw the breakout retest of that level to trigger the second position, and that one also ran about 50 pips before the sell pressure resumed in this market. And on Tuesday, we were part of the sell position. Price took us out. We were again here, and we had our stop loss triggered here, and we were taken out. So in the last 24 hours, we have I think we had 2 stop losses here. Price action taking us out of all this sell position at this point, but it's okay. If we consider the profit we had made so far this week, at least we are still going to be on the positive side on this one. And during the live session yesterday, I told us all that I'm not going to be buying the GBPUSD unless price action breaks out, retest the 1.23500 level, which has been a strong selling niche in this market in the last 1 week. And you can see what has been happening here. We had the first bullish attempt here breaking out of the structure. During our live session yesterday, this happened, and I told us all that we might likely see price come back to retest this trend line to incite another wave to the upside. But what happened here was a breakdown of the 1.22100 level, which would have triggered our sell stop order here, and I hope that you moved your stop loss to secure your position, as price action moved about 20 pips in our favor before this bullish momentum began, taking us out of that position at a worst case scenario of break even. So right now, this is where we shall be focusing on for today, and that is this area here. So this morning I identified this level at the 1.23620. So the first time price action broke out of the 1.23500, we saw selling pressure resume around this area. Now this morning I had my buy stop order triggered here. If you are taking advantage of this one here, kudos to you for being on standby. As we said yesterday, that we are going to be looking out for buying opportunity above the 1.23500 level, and if you had bought right there, you want your stop loss to be somewhere around the 1.23200 level, which will be dovetailing to about 23-25 pips stop loss there. And we continue to look forward to more opportunities to add more position to our existing trade here. So we are looking forward to another breakout of the 1.23600 level to give us that confirmation and that confidence to be part of this trend continuation to the upside. Now, one thing about buying above the 1.23620 is this. I want you to listen attentively, please. I don't want you to miss out on this one. We are not having a buy stop order above the 1.23620 at this particular point in time because of the sell pressure we have been witnessing here in the last couple of hours. So what we want to see, if price action ever breaks out of the structure, remember, we are not getting too excited, as we need some confirmations to happen, and this is likely going to be coming in the form of a retest of structure. So if a breakout happens, we scale down to our lower time frame, we look for a retracement back into structure. It could even break below the 1.23620. It's okay, as long as we already have a breakout of that structure happen. If price action retraces back into this level right below the 1.23620, then you can have your buy stop order placed at the top of the structure. Then we want to be joining that trend continuation to the upside when price action further slides through that level. So that is how we are going to be buying the GBPUSD, or adding more position to this current one. So for those who are already in this position, ensure your stop loss is somewhere around the 1.23200 level, which will be dovetailing to about 23-25 pips stop loss around that area. So for the GBPUSD for today, I'm holding on to a bullish bias here, hoping that price action will do a significant breakout of the 1.23620. Now, in as much as we're still looking out for buying opportunity here, we need to also consider the potentials of the sellers in this market. And if we consider the continued selling pressure around between the 1.23500 level and the 1.23620 area, we should know that the consideration of selling pressure here is very, very important. So what I will be doing here to consider selling opportunity in this market, I want to see price action break down the 1.22800 level for me to be part of any sell momentum in this market. So it will take a long time for that to happen, and in case price action drops below the 1.235, for you to join the sell position earlier before the breakdown of the 1.22800 level, this is what you can do here. Please listen attentively. So if price action drops below the 1.235 level and we start seeing sudden pressure below the structure, that is buyers find it difficult to break above that level, then you scale down to your lower time frame. You look out for a reversal pattern, breakdown retest, price action finding lower lows and lower highs. These are key parameters we want to be looking out for to give us that confirmation that sellers are gradually coming in. And if that is going to be the case, we join the bearish momentum to the downside, and we have key structures that we can use to add more position to our existing trade. So we have key structures like the 1.2210 level and the 1.22800 area. And if price continue to go to the downside, probably because of the sharp contrast in a potential variance in the GDP data, price continue to go down significantly, well, we have more structures here to guide additional positions on the GBPUSD for today. So it's quite a simple setup we have here. So I hope that we be on standby so that we can catch these moves when they finally happen. So that is that on the GBPUSD. If you have questions, feel free to drop your inquiries in the comment section. So I will be moving on to the next pair, which is the XAUUSD, and I'll have to run through this quickly because of the time. And let's see what is happening on the 1 hour time frame. So how did we start this week? What happened at the beginning of this week? Just as usual, and just as it happened across the major pairs of the US dollar, we saw how price action was initially caught within a channel between the 1,980 and the 1,970 area. And within the channel there, despite we had an indecisive phase there, we could see traces that sellers are probably being in charge within that channel, and this was more evident after connecting the series of lower highs in this market. So with our sell stop order triggered just below the 1,970, we saw our price action drop significantly well into the 1,944 area, moving about 260 pips in our favor before this bullish momentum began on Tuesday. And during our live session on Tuesday, I laid emphasis on the importance of the structure, that it's likely that we see price action transition into a reversal pattern if this low here at the 1,944 level is not broken. Remember, this is the lowest point price action has ever been this week. And look at what happened here prior to our live session on Tuesday. We saw how price was unable to break the previous low, and I told us all that we might likely see price action transition into a reversal pattern in the form of a double bottom structure. And this was exactly what we had here. And what we did here during the live session yet on Tuesday was to identify the neckline of that reversal pattern, which fell exactly at the 1,964 level. And one interesting thing about this structure is the fact that it shares a confluence with that bearish trend line that has been suppressing all bullish attempt in this market since the beginning of the week. So a breakout of the neckline of that reversal pattern would have broken out of that bearish trend line to give us a clue that the bearish trend line may no longer have the capacity to continue to reject all bullish attempts in this market. And so with a buy stop order above the 1964 on Tuesday, we saw our buy position triggered during the New York session on Tuesday, and price action moved about 120 pips in our favor before this momentum began on Wednesday. And for the last 24 hours here, we have been witnessing a choppy situation right here, where price action is yet to find a sense of direction. And I'd already told you that everyone is looking forward to a catalyst that will be driving price movement, and we have something we can look forward to today, which is the GDP. So we want to see how the market is going to be reacting to the GDP. We are going to start seeing reaction like 30 minutes before the GDP, and after the GDP too, we are going to be seeing some fallout, some immediate reaction happen here. So in that being said here, if we zoom into the consolidation phase that has been happening here in the last 24 hours, what you will observe here is that between the 1964 level, which happens to be the neckline of that reversal pattern we identified earlier, and the 1960 level, we can see that we have been seeing some buy pressure resume around that area. And with this kind of situation here, we shall be calling this a demand zone, at least in the meantime. So for the sake of clarity, let me just put an arrow here and label this area a demand zone. So this is a demand zone which has been holding buy pressure in the last 24 hours in this market. And if we look at the reversal pattern we identified earlier, that is the double bottom structure here with the neckline area that was broken around the 1964, you will see that since the breakout of the neckline happened, price action has come back into structure to retest the structure multiple times. So every attempt by the sellers to break down the structure has been met with strong resistance from the buyers, thereby giving us that demand zone that we have here. And I'm of the opinion that price action will be continuing to the upside based on the structure. And to further help us to be able to be part of a successful trading position today, I was able to find this simple setup here so that we can use it to guide our trading activity. And what I did here was to connect the series of lower highs here. So we have a bearish trend line. So if price action trades above this trend line, definitely any buy position we are at that point, we shall feel comfortable at that area. So we should be having our stop loss somewhere between the 1964 and the 1960 going forward. So the 1970, if you remember vividly at the beginning of the week, this is one of the key structures that we were using to guide our trading activity at the beginning of the week, and that was also the support line where we sold at that point. So that area also has a selling pressure at that point. So what we are going to be doing right now is to see a breakout of the 1970 to be part of a bullish momentum to the upside. So we want to see price action take out all the sell positions that has been here in the last 24 hours to give us that confirmation to go bullish. So we should be having a buy stop order anywhere right above the 1970 and a stop loss right below the structure here. It will be around 65 pips stop loss, or about 100 pips stop loss if you can afford that based on your size of your portfolio at this current point. Now we look forward to more opportunities to add to our existing position if price action ever breaks out of the 1980. So this is what we shall be looking forward to buy the XAUUSD going into the New York session today. Now that we have figured out how to buy the XAUUSD for today, let us quickly look at the potential of selling the XAUUSD if the market is going to be doing the contrary of what we just talked about here. So what happens if the sell pressure around the 1970 continues and buyers continue to find it very, very difficult to break out of that level? Then at this point, we shall be considering the potential of selling opportunity in this market. And what do we want to see in this market for us to sell? What do we want to see? What we want to notice on this chart that will make us feel comfortable selling the XAUUSD? Well, based on this current market structure and considering the bearish trend line that we have here, we shall be using the bearish trend line here to guide any selling opportunities in this market. Coupled with that line is going to be the 1960 area, which happened to be the lowest point price has been in the last 24 hours. So what I want to see here for me to sell the XAUUSD is to see price action take out all the buy positions around this area, breaking down both up the zone around the 1964 and the 1960. And if this happens, remember, we are not getting too excited because it could turn out to be a false breakdown, just like what happened here yesterday, and we might likely see price action to do a false breakdown to incite another wave of bullish momentum to the upside. So we need to be very careful at this particular point in time. So what we are going to be doing is to remain patient. Then after the breakdown happens, we want to see price action come back to do a retest of structure. It could be the retest of the 1960, it could be the retest of the 1964, which also shares a confluence with that bearish trend line. But most important pattern we want to be seeing around this area is something like a reversal pattern, selling pressure, where we see signs that buyers are finding it very difficult to break above this level. Then we shall be getting ready to be part of a sell momentum to the downside. So this is what we want to see in this market for us to be thinking of selling the XAUUSD for today. So let's be on standby to be able to catch this opportunity, and you might want to screenshot my screen so that you can use it as a reference point when you're about to make your own individual decision on this pair. So that is that on the XAUUSD for today. If you have any questions, feel free to drop your inquiries in the comment section. So I will be moving on to the last pair for today, which is the XAGUSD, which was introduced to us by Steamroller on Monday. So we are going to quickly run through the XAGUSD right now so that we can be able to do a quick recap of what we talked about today so far. So this is the XAGUSD, and we have been quite profitable here in the last 48 hours in this market. So remember, during the live session yesterday, this was where we were doing the live session, we saw our price action was trading somewhere around the $23.30 level, and I told us all yesterday that we are going to be buying the XAGUSD considering the ascending channel that was identified here. And I said the only way we are going to be selling the XAGUSD at this particular point in time is to see price action breach the support line of this ascending channel. So if a breakdown happens, sudden pressure below the structure, then we could be thinking of selling this point. But if that does not happen and price action continues to the upside, we identify this key structure at the $23.35 level, where we said we want to be having our buy stop order. So if price breaks out of that structure, we shall be having a buy position. And this is exactly what happened here. We saw price action break out, retest of structure, and at this point we had our buy position triggered for yesterday, and price action continued to the upside. Please hold on a second, please. I want Alright, sorry for the breaking transmission, please. I had to sort out some personal issues, but we are fine to go right now. So we also had the second position triggered here at the breakout of the $23.50 level. So you have been quite profitable here. Steamroller, you in the house? Let me know how well you're doing on this pair so far this week. If you actually took it, let me know so that we can be on the happy side here together. All right, so we had the first position triggered at the $23.35 level, and we also had the second position triggered right here at the breakout of the $23.50 level. So currently, if you are taking advantage of both of these positions right here, the first position will be running with about 37 pips in profit right now, and the second position will be running with about 20 pips in profit. So kudos to you for being on standby if you are taking advantage of this opportunity. So what we are going to be doing next, you all know what we want to be doing right now. We want to be securing our position by moving our stop loss accordingly and lock in this profit that we had made so far. So what we are going to be doing, and the most appropriate area I think that we can move our stop loss here, is somewhere right around the $23.60 level. So we have a structure here that we can use to secure this current position, and let's wait and see how far this bullish momentum is going to go at this point. As you can see right now, we are at a critical point at the resistance line of that ascending channel, where we might likely be seeing some selling pressure resume around this area to respect that ascending channel to bring price back into the trend, the support line of the ascending channel, which shares a confluence with the $23.50 level. And if price breaks down that structure, then we might likely be seeing that bearish move to the downside. So these are things that we shall be looking at today on the XAGUSD. So I hope that we be on standby to catch any of this opportunity, and if price action continues above the resistance line here, then we shall be thinking of adding more position. So what do I want to see here for us to be adding more position to our buy positions here? Let's scale up into the daily time frame and see if we can identify a structure around that area that we can use as a yardstick for trading activity. So we have somewhere right around the $23.80 level, which has been a structure where we have seen certain pressure here at the beginning of this year. So let's run our resistance line across that level to acknowledge it and use it as a yardstick for trading activity for today. So we have that structure figured out there. So I'll be labeling it the $23.80 level at that point, so you can map that out on your chart in anticipation of a breakout of that level. So let's continue to watch and monitor price action in that regard. So let me zoom into the current structure right now, and I think it's appropriate to scale down to a much more lower time frame so that we can see what is happening there. Okay, so we have the 1 hour time frame right now, so we shall be looking forward to more opportunities at the breakout retest of the $23.80 level. But if we price gets into that structure and we start seeing selling pressure resumes in such a way that price comes back into the ascending channel and selling pressure resumes below the resistance line, we'll have no choice than to anticipate selling opportunities in this market back into the support line. And I told you earlier that if a breakdown retest of the structure happens, we will have no choice than to be thinking of adding more sell position to that existing trade. So this is my views here on the XAGUSD. It's quite a simple setup, and I hope that we be on standby to catch any of these opportunities in this market. So that is that on the XAGUSD for today. So for the sake of those who are not part of the beginning of the session, let's quickly do a recap of what we talked about so far today. So the first commodity we talked about today was the US oil, and on the US oil, I told us all that we have a buy positions running right now as price action remains above both the bullish trend line here and the $73.20 level. And I told us all that the $23.20 level still remains the platform for buying opportunity here today. So let's see how this goes and a breakout of the $73.90 level will be welcoming more opportunities to add more position to our existing trade. A further breakout of the $74.35 level welcomes more opportunity as well. So that is that on the US oil. Then I told us all that I want to be seeing price break down the $72.50 level for a selling opportunity in this market. So let's see what happens as we head into the New York session today. Then we went on to talk about the US tech, and on the US tech we saw how price has broken out of that 12,860 level to further emphasize the strength of the buyers in this market. And to help us to be able to be part of any trading opportunity here, we have a key trend line here which we said we shall be using to guide our trading activity for today. So we have this trend line. So what this simply means is that as long as price remain above this trend line, we shall feel comfortable in our buy position. But if at any point in time price action breaks down the trend line, breaks down the 12,860, selling pressure below the structure will be welcoming a sell position in this market. So let's be on standby to catch that move. Then we went on to talk about the GBPUSD today, and on the GBPUSD, whoa, we already have a situation here where price appeared to as taking us below our entry point at the 1.23500 level, hereby making us be in a loss position right now. But it's okay, even if we are stopped out, we want to be part of the sell position here. And I told us all that if price continue to find it difficult to break above that structure and we start seeing certain pressure below the 1.235, we might be in for another wave of bearish momentum to the downside. And I told us all here that the current market structure here for selling position in this market has a tendency of giving us multiple entries, as we have key structures like the 1.2210 level to add more position to our sell position, 1.22800 level to add more positions, and we have the 1.22500 level to add more positions here. So I hope that we be on standby to catch any of these sorry, this is 1.23100 level, please. That's a typographical error. I just readjusted that. So that's 1.23100 level. Please don't mind me there. So let's see how price action plays out on the GBPUSD in the next couple of hours. Then we went on to talk about the XAUUSD. I told us all that we should be having a buy stop order above the 1,970 as we continue to see that this area has been a strong buying niche in the last 24 hours. So we are looking forward to buying opportunity above that structure. And I told us all that we have a trend line that will make us feel comfortable in whatever positions we are in. So if we are in a buy positions here, as long as price remain above this trend line, we shall feel comfortable in that buy position. But if price action drops to the downside, I want to see a breakdown of the 1,960 to give me an opportunity to sell. But remember, I told us all that we are not going to be having a sell stop order here, as we need some confirmations to happen, which is likely going to be coming in the form of a retest of either the 1,960 or the 1,964 level, where we have some bearish trend line there that will be guiding the bearish momentum to the downside. So that is how we are going to be selling if that is going to be the case. But the look of things right now, it appears that bullish momentum is very, very more reasonable at this particular point. And the reason is simply because of the strong buying niche in this area, which has been rejecting all attempt by the sellers to continue to the downside. So let's hope that price action continues as expected. And remember that we have a key structure at the 1,980, which happens to be the highest point price has ever been for this week, to look out for more opportunities if price action ever breaks out of that level. Then we went on to close the day with the XAGUSD, a pair that Stimula introduced to us at the beginning of the week, and I told us all that we are quite profitable on this one right here, as we were able to be part of that buy position at the structure we identified here during the live session yesterday, which is the $23.35 level, and we also acknowledge this area at the $23.50 level for more opportunities to add more position to our existing trade. And right now the price is along the resistance line of that ascending channel we identified at the beginning of the week. I have identified the $23.80 level where a breakout retest of that structure will be welcoming additional buy position to our existing trade. But there is a caveat to this current structure here, where I said if selling pressure resume at any point around this area where selling pressure starts seeing rejection of the resistance line, we might likely see price action respecting that ascending channel one more time, dropping to the downside into the support line, which also shares a beautiful confluence with the $23.50 level. And I told us all that we could be looking out for buying opportunity above the structure, but if price action breaks down the $23.50 level to the downside, then we might be in to add more sell position to our existing trade. So this is what we shall be looking forward to on the XAGUSD for today. It's quite a simple setup to take advantage of. And for the sake of simplicity, you might want to screenshot my screen like I always say, so that you can use it as a reference point when you're about to make your individual decision. And it's on this note I will be calling it a day here on the Extreme Speed Live. It has been a wonderful moment with you guys, and for the newcomers, I hope you are able to get one or two things here and to use this information to take advantage of any trading opportunity during the New York session today. So thank you very much for being around, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review all the pairs we have been monitoring since the beginning of the week in anticipation of the last trading day for this month. So thank you once again. It has been a wonderful moment. Looking forward to seeing you tomorrow, and do have a wonderful and beautiful evening. Bye bye everyone.